recognize David Bowers because previously he was at Merrill Lynch, where he ran the famed Global Fund Manager survey. He is now focused on U.S. consumers in this new survey. He's done 5 of them, and they're the most important audience to survey. Just came out today, and it's not looking pretty. Give us some of the astounding highlights.
It's not looking pretty. 88% of those we polled, and these are people aged 25 to 65, they're worried about their financial situation. They're continually getting disappointed. For the second year running, their expectations haven't been met. But the thing that really caught our breath away was just how much damage the housing sector has done to their confidence. A third of those who own their home believe their home is worth less than they paid for it. A quarter of those with mortgages are underwater. This is a real headwind against which the Obama jobs package is going to have to push. I think these figures are much worse than we expected.
I wonder if the jobs package that Obama has laid out will get at these issues, which housing, jobs, are looking more and more structural or long-term.
Yes, interestingly, only 8% of our group say they were unemployed and looking for work. So that's not out of control. But the people's attitudes towards debt, towards borrowing, is very, very cautious indeed.
Debt, that's interesting that you bring that up, because more and more we hear that consumers and businesses and investors are not confident, and a lot of that comes from the fact that we do not have a credible debt fighting plan in Washington.
Yes, it's interesting. There is concern about that may mean higher taxes eventually, but the number one concern for many people is actually the inflation rate. That leaps out as their biggest financial concern. In terms of paying back their debt, the financial crisis has changed their attitude to debt in a very, very profound way. 2/3 of our sample say that they view debt very, very differently. 1/3 of our sample say they're going to reduce their debt over the next 12 months. That is going to be really, really difficult in terms of offsetting that as far from a consumption point of view.
David, I want to go back for a second just to what's happening in the housing market. We happen to have the head of Housing and Urban Development on Friday, Sean Donovan, and he was talking following Obama's speech on Thursday about some of the new initiatives they have to focus on what's happening in terms of underwater mortgages. He didn't get to specifics, but he did say they are working on a program. What, in your view, given the information you've gotten from this survey, should the administration focus on first as it relates to the housing crisis?
I think the thing that really comes over from this survey is concern that house prices are going to go lower. So the numbers I mentioned earlier, that's how people feel today. But if you imagine that house prices are lower in a year's time, then these pressures are going to be even greater. And so I think stabilizing the value of houses is actually absolutely key. I think the second thing is really to look at the availability of housing finance. 38% of our panel say it's still difficult to get a loan. And I think so in a way, I think it's been left quite late. The auto sector has been tackled really early on in the financial crisis, but housing has been sort of allowed to drift. And I think that the current loss of confidence reflects that. So this is now very urgent, but stabilizing the housing market is the number one priority, I would argue.
David, of the survey respondents, what is the awareness of the consumers about what's happening in Europe and the worsening sovereign debt crisis?
Very little. I don't think they've got enough to worry about in the US. So that hasn't had a big impact. Where it may have an impact is on corporates' decisions to hire. Because obviously in a world of increased uncertainty, people become much more cautious about taking on new people and creating new jobs. So that may have a marginal impact. But no, all the problems in the survey are homegrown.
I wonder how long it takes for the losses in the stock market and the volatility in the other markets to trickle down to the consumer.
Yes, I think there clearly is some concern there. One of the things, or two things that really struck us from the survey, first of all is how risk-averse Americans have become. 50% of the panel say they no longer want to take risks with their savings. And for a country which has always been very entrepreneurial and keen to take risks and able to take risks, that's a very dark change. And the second thing which really disturbed us was that people are now far less confident that the children of their generation are going to have the same standard of living that they do today. So I think the longer this recession continues, the longer the concern in the consumer lingers, the more people are sort of retreating back into a very, very defensive position. And that needs to be addressed very, very soon, in my view.
On the confidence front, David, you know, we've seen consumer confidence numbers falling consistent with your research, but we've also seen consumer spending actually holding up reasonably well. And some analysts saying that they think this is going to be a great year for earnings for companies. So did you get any granularity on exactly where consumers are likely to cut their spending first?
We didn't. I think you're right to highlight the difference between the headline consumer confidence numbers, which look dire, and the actual reality of it. Because if you look at retail sales growth, if you look at personal consumption growth, it's not at recession levels, far from it. But I think there is a psychological shift, maybe behavioural shift taking place, where people are losing confidence in economic leadership, in the ability of policymakers and politicians to get to the heart of the matter. And I think that's what the consumer confidence numbers are really picking up at the moment. I think people are saying, forget it, there's going to be no easy outcome here, there's no win-win, let's get defensive, let's hunker down. And so I think people are taking themselves to a darker place than they might otherwise have been the case. I do think, though, that one of the areas that policy ought to focus on is why companies have been so reluctant to hire. You've got companies with very high savings ratios, very high levels of profitability, and getting corporate America to re-engage in the labour market here, I think would make a real difference. And again, that's a policy area that hasn't been focused on yet.
All right, David Bowers, thanks so much. Lisa